Monday, January 6, 2019, Maneco 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank all my viewers, all my supporters for their contribution to the channel through PayPal, through Patreon, through their purchases of Maneco 64 merchandise in the Teespring store. And also for your interest in my channel. I really enjoy the live streams as well, all the interaction and your comments in the videos. I try to answer as many as them, and hopefully we'll keep this community going, the Maneco 64 community going for a long time. This morning, I want to talk about gold and silver and what in my opinion, I would be doing in the current situation, in the uncertain markets, in the uncertain times geopolitically. And I'm going to look back at 1979, 1980, what gold did during the Iranian hostage crisis. And I'm not equating the current crisis to that crisis, but it shows you how important Iran is, and how markets and currencies react when there is a major crisis relating to that country in the Middle East. The other thing I would like to say is that gold, physical gold, I personally look at it not as a trading instrument, more as savings. We need to keep in mind the fundamental reason why gold and silver are going to keep their value and they're going to keep rising, in my opinion, versus the fiat currencies, and that's the debt and the fact that central banks flipped in 2019. They flipped from trying to normalize their abundant, accommodative monetary policy that they've had, that they had since 2008, 2009. They thought they could normalize things, but they saw that it was impossible. So there's no end in sight to the inflation, to the money printing, to the QE, to the support of markets. And that means more and more creation of this phony money or fiat currency credit. And that should continue to help precious metals. Granted, this Iranian crisis, in the face of it, has helped gold rally, but it's just confirming a technical picture as well. For traders, I do have some levels for you. We're going to look at some charts as well. Even for people who hold gold, if gold spikes like it did during the Iranian hostage crisis, who knows? You might want to unwind some of your gold. You might need to use it for something. I'm not saying you should. And I probably won't myself because unless you need it, it's like savings. You don't dip into your savings unless you need it. But for trading, it's a different game. So that's what we're going to look at today, how gold did in 1979, 1980. So let's start first looking at what that was, the Iran hostage crisis. So I've gone to Wikipedia. I know some of you don't really rate Wikipedia, but in this case, I'm going to look at it because I just want to look at the facts of when it started, when it ended, and the dates, of course, and then look at the gold chart from back then. So Iran hostage crisis. The Iran hostage crisis was a diplomatic standoff between the United States and Iran. 52 American diplomats and citizens were held hostage for 444 days from November 4th, 1979 to January 20th, 1981, after a group of Iranian college students belonging to the Muslim student followers of the Imam's line, who supported the Iranian Revolution, took over the U.S. Embassy in Tehran. And I was about 15 years old at the time. I remember it very well, this Iranian hostage crisis. At the time I was living in Brazil, but it was all over the news. Just like today, the situation in Iran is all over the news. Western media described the crisis as an entanglement of vengeance and mutual incomprehension. American President Jimmy Carter called it the hostage-taking an act of blackmail and the hostages victims of terrorism and anarchy. In Iran, it was widely seen as an act against the U.S. and its influence in Iran, including its perceived attempts to undermine the Iranian Revolution and its long-standing support of the Shah of Iran, Mohammad Reza Pahlavi, who was overthrown in 1979. So yeah, the date of the release is quite interesting. January 20th, 1981. That was the day that Ronald Reagan was inaugurated as president. Many people speculate that Reagan's team was involved in negotiating with the Iranian hostage takers, the people behind it, to keep those hostages there for longer than necessary to help Ronald Reagan in the election. We'll never know about that, of course. They'll call this a conspiracy theory, but it's very interesting that the hostages were released right on the day that Jimmy Carter left office. So let's look at what gold did during that crisis. Do I remember how gold was trading back then? No, I wasn't into the markets at age 15. So have to look at a chart and show it to you. So throughout 1979, as you can see there, gold up until the summer, it was languishing, even though it was going up between $200 and $300 an ounce. And then it started picking up towards just before September there. We traded up to 400 by October, dropped back below 400 just in the beginning of November, and go back to that the date, November 4th, 1979. So you can see how gold starts picking up throughout that crisis, throughout December, and then tops on, I think it was January 20th or 21st, 1980, not 1981. That, of course, as well, is related to the fundamentals of the time. The US dollar had been in trouble throughout the late 70s. I think it was 1977, 78. The US Treasury even had to borrow in a foreign currency. I think it was Swiss francs. And this was the time as well that silver was spiking higher towards 50. So there was an underlying precious metals bull market as well. We'd had the stagflation of the 70s. We'd gone off the gold standard Bretton Woods system in 1971. So that was also the fundamentals, but the Iranian hostage crisis helped. So gold basically went up to 850 in January after being around 400 in November. So it went up very quickly. Am I saying now that we're going to go up to around 3,000 in gold in the next few weeks? No, but the geopolitical tension is there to help gold, I think, with the Iranian situation. And also the fundamentals are there behind gold. My target, so let's go now to a present day chart of gold. My target really, looking at these falling wedges here. There was a first falling wedge early in 2019. We broke through there when we went through just above 1290, then went almost straight up, not straight up of course. It took a few months. We got up to 1555, and then we consolidated since the beginning of September until recently, just before Christmas, we started breaking out above 1477, 1480, and it looks like we're gonna match this move that we had earlier this year after the breakout of the first falling wedge. And for me, just looking at the chart here, it could be a target of 1800 in gold. When is that going to happen? Not tomorrow or next week, I don't think. More in the next few months. As I've said before, markets don't go up in a straight line. Markets take rests. That's what consolidations are called. As you can see here in this chart, we now have a gap on the weekly and daily chart. We gapped up. So there's an old saying that gaps are always there. Gaps are always covered. The markets always come back to cover the gaps or close the gaps. Of course, the high from September, early September, was around 1556. So that's going to be support as well. The retracement lines here, as you can see, 1483 was a key level. I've spoken about it's the 50% retracement of the move from the high in 2011 to the low in December 2015. And then you have the 61.8, which is 1587, which happens to be very close to the overnight high, which was just below 1590, around 1589. So that's going to be a next resistance there. And I would say support will be quite strong around 1550 and 1555. So that's the picture for gold, technical picture. Let's look at silver. Silver has managed to finally take off a little bit. We've been up as high as 1850. We're now at 1833, but it's looking pretty good. It hasn't gapped up, silver. So now let's look at the markets in general. It's 8:20 a.m. London time. Right now, spot gold is at 1572. We're up $20, 1.3%. As I said, overnight high right on the open was 1589.85. That's on my system. It says here the low was 1551.48. I don't think it traded as low as that. This is just where the market closed the previous session. Silver right now, 1833, up just under 30 cents, up 1.57%. Good sign. Silver starting to outperform a little bit gold. The stock market. The Dow is down 122. The Dow futures at 28,509. So down just under 0.5%. S&P is down 0.33%, 32.23. NASDAQ 100 future down 0.5% at 87.54. Currencies are very quiet actually. They're not doing much, surprisingly. The fiat currencies, that is. Sterling is unchanged, 130.75. Same thing for the euro, 111.66. And the dollar versus the yen, unchanged, 108.06. Dollar versus the yuan is up slightly at 697.17. Crude oil is picked up overnight. WTI is up 1.6%, just below 64, and Brent is up 1.9%, just below 70 at 69.75. Let's look at the bond market. 10-year yields have fallen. That helps the Federal Reserve. Up until last week, we were knocking on the door of 2% in the 10-year yield. Right now, we're at 179. So this geopolitical crisis, we don't know how it's going to evolve, but is helping the so-called flight to safety trade. I know it sounds funny to say that it's a flight to safety, U.S. Treasuries, even though the Uncle Sam is running huge deficits and the debt keeps growing. But don't forget, and I'm not saying we're going to have World War III, but the Federal Reserve can do anything they want. During World War II, they did QE from 1942 to 1948. They kept the short-term rates below 1%. for a long time by setting the, people say they set the rate, but how do you set the rate? Well, by printing money out of thin air and buying those securities to raise their prices and keep the yields low. I don't think they're doing that yet, even though they're buying 60 billion of T-bills a month. The market is doing that for the Fed at the moment. So to sum up, yes, gold is looking good. It's for us who have been following gold and stacking gold and silver, this is a good time, of course. I started this channel back in the end of 2015 when gold was like not loved at all. It's been going up. It is a frustrating market right now. If you are going to trade paper gold, which I don't do anymore, and it's up to you to do that, you need to be up almost 24/7 because gold trades 24/7 almost, and it's going to be very volatile. And you can see how it was yesterday on the open. For those who look at gold like I do as savings, as insurance, and hold it in the physical form, yeah, if gold were to spike to 1700, let's say, with this crisis escalating by the end of next week, yeah, go ahead and maybe take some profit, or not even profit. I don't like to say that because it's money, or exchange it for something that you need. Not the whole thing, I would say. That's what I would be thinking of doing, even though I don't need to do that. I would hold on to it. So if you enjoyed this video, please give me a thumbs up. If you haven't subscribed yet, think about subscribing. If you enjoyed the videos, please share it far and wide as well. It helps. And you can also follow me on Twitter, BitChute, Steemit, and on DTube. I wish you all a great day. Take care. Bye.